Hello and welcome to Crypto Weeklies. In this video, we analyze Cardano and its token ADA. None of the content financial advice. Let's get started. Right now, the price of ADA is reeling under 25 cents. It has come down to this yellow line of support, the trailing support that ADA has enjoyed since 2018. This area back in 2018 was at around started at around 3 cents, and the terminal price of that area was at around 22 cents. Now from cycle to cycle, you can see that in the last bear market, the top of the channel provided a significant support at the market bottom that was at around 27 to 28 cents. Right now the price is lower than that. So this time around, the bear market for ADA has been, at least since in 2026, as of March of 2026, has been more brutal than in 2022, where the price action kind of was at a similar level in December of 2022. This is again only fourth or fifth month after that September October peak. So 1 2 3 4 5, now it's sixth month, whereas you can see from the last bear market from October 2021 all the way through about January 2023. So 2 months in 2021 and all of the 12 months in 2022, 14 months downturn lasted. But one could argue that this time around the downturn came in the middle of the bull market itself, and the bullish rallies weren't that extreme. So for example, over here ADA did spend 1 2 3 4 5 6 7 8, almost 8 months over here, 7 to 8 months over here in this downturn, and then again 5 months over here in the downturn over here. So cumulatively speaking, more red months this time around than the last time. There was only one red month in the midst of a bull rally which started in the towards the end of the halving year of 2020, and then one red month was in July 2021, and essentially it was all up only months from November 2022 all the way to about September 2021. So 1 year worth of continuous bullish action, whereas over here, let's say in the halving year there were 1 to 3 bullish months, and then another 3 bullish months in the post halving year from July to about September, and that was it. And the major rally occurred in the halving year itself, starting in that recovery year of 2023, and then the halving year provided 2 to 3 months of bullish momentum. So where can price action go from here? The optimistic scenario is a bottom closer to here at the top of the channel over here at somewhere between the current price and then the midpoint at around 19 cents. That's the optimistic approach. The pessimistic view is, if let's say the bear market lasts for several months, then the price action eventually would find a floor at the bottom of the channel. Right now it's at around 9.5 to 10 cents, but as let's say if the bottom occurs later into 2026, then about 10.6 to 10.7 cents could be, so slightly under 11 cents. That could be the floor for ADA per that perspective. Coming to our own website, my own website, cryptoweeklies.com, this website manages all of the data science based models and provides indicators. So overall social sentiment risk right now is low. That means altcoin accumulation related risk has gone very low, but it's not at its lowest, which it typically is any time below 20. The narrative cloud over the last 7 days, the bearish narrative was rampant, but again there are some bullish narratives popping up here and there. Cardano as a narrative is still holding its own, and it's relatively strong. You can, if you want to look at each of the spikes in the narratives, this is derived from social media platforms such as YouTube and X, and checking the term frequencies of crypto related narratives in comments as well as YouTube titles and social media comments as well. The bullish narrative again and the bearish narrative had a similar spike, but then now the bearish narrative has kind of died down over the last 3 to 4 days, whereas the bullish spike is still rampant. Bitcoin and Cardano are more of a narrative, largely speaking, but ETH related narratives have also spiked up. So you can see in March over here the longer term attention. This is the monthly views of YouTube channels. You can see in 2021 the monthly views for popular YouTube content related to crypto was at around 62 million, whereas in the euphoria phases of 2024 it was almost half of that, around 38 million. And when Bitcoin peaked, it was much lower than that, at around 25 million. Now in February 2026, that was the last complete month. Now we are at March 30, so essentially more than the number of days that we had in February. But the monthly views in February were 18 million. This time around they dropped off like a cliff, off that cliff, at around 12 million. So what I would estimate, this is the social sentiment risk for February at around 26 out of 100. I would estimate going into early April, when we will have full month's data for March, I would likely estimate that the social sentiment risk has gone lower than 20, as it is a derivative of all of these narratives, as well as total views related to crypto content, and the total comments, which also the red line over here, which has also gone down. So all in all, the market has, at least the asset class has entered into that bear market lull, and that begs to ask this question: if altcoins such as ADA are offering a composite risk of accumulation lower than some of the higher cap assets. So for example, this is the accumulation versus distribution zone analysis using composite risk model. This model includes all of our major individual models, and provides with a composite risk based on all of these individual model based risks. So for example, logarithmic regression deviation, time weighted average price deviation, 20-week simple moving average price based deviation between the price and what the current fair value is, or what the current time weighted average price or 20-week simple moving average price is, and also the drawdown from the all time high. With that basis, 2025 time period, where most of the cryptos again did not do that rally to the new all-time high. So ADA not an exception. Still, per this model, the logarithmic regression based decay model, the price has entered that undervaluation territory. If we go by the composite risk as suggested previously, the composite risk less than 0.2, and then another component of that composite risk is the time weighted average price. Whenever the price has been below the white line over here, which is the time weighted average price, this guides treats all of the days since 2017 as one single equally weighted unit, and the average price of each day is considered to that price informs the time weighted average price, which is the white line over here. Typically when the price has been below the white line, the price is said to be spending at a time where spending at a price level where the price has spent very less amount of time, essentially beating the clock by entering at a level where the price is lower than the time weighted average price. Close to the white line is the natural state, that is ignoring the hype or the doom case scenario, and as and when the price gets higher than, let's say, risk level 7 over here, like it did in 2024, that's where the distribution or overvaluation related claims make the most amount of sense. Right now the price is at risk level 1, that is per the time weighted average price model. Some of the best time to DCA ADA has already arrived. Where this gets slightly dicey is the 20-week simple moving average based risk is still at around 0.2, ideally at the previous bottom again at around 0.19. That's the zone where most of the 20-week simple moving average price based bottom occur, not at the risk level 1 or risk level this plum colored risk level that usually manifests at the initial drop from the euphoria peak. This time we did not have a euphoria peak, so a panic bottom might not be here. So that's the reason the risk levels are kind of elevated. Let's say if there is couple of months of bearishness ahead of us per this model, the non-panic bottom for ADA, let's say starting April, we don't know when those 2 months will arrive. Let's assume start from April and then go into early May. Then the price floor for ADA could be around 15 cents. If it lasts for 2 months, it could be, the price floor for ADA could be close to 10 to 11 cents, coming back to this line over here, which currently the bottom is at around 9 cents, but come a few weeks to months, then this yellow line over here could be well at around 10 to 15 cents. So that's the worst case scenario for ADA. If we try to come up with a bullish case for 2027, 2028, the base peak forecast is at around $2.50, which is roughly speaking 9.5, little over 9.5x over this current price. If the bottom is closer to 12 cents, then it rally to from 12 cents to $2.40 would be a 20x. So with that, I would like to conclude by saying again, price is closer to the bottom than to the peak. And this is also corroborated by the 200 week simple moving average, which is this white line over here, which is at around 50 cents, 300 week at around 67 cents. The price is well below all of these key price actions, as well as closer to this ascending area of support, but the floor is close to 10 to 12 cents. And if there is a recovery to the other side, and if price action were to go and do something similar to what it did in 2021, then brighter days might be ahead for ADA. Let's see what happens in 2026 towards the end of the year, and how what kind of recovery is in 2027. And currently right now price is in accumulation phase. And with that, hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day.